Dear students, welcome to our channel. In this video, let us have a discussion about income from house property, which is one of the important heads under income tax topic. Income tax topic is a part of the direct taxation subject. Income from house property. Any person who is owning a house, whether he is self-occupied in the house or let out for rental purposes, he is supposed to account under Income Tax Act. Now, estimation of taxable income from house property. It is to be done with the following a format. It starts with the gross annual value and municipal taxes is to be deducted to arrive the net annual value. Every assessee can claim a standard deduction under section 24 at the rate of 30% on the net annual value. And there is another concession given to every assessee for the interest on loan that they have borrowed for the purpose of purchase or construction of an house, and even it could be for repairs or renovation. If it is proved, it can be the interest paid could be taken as a deduction from the income from house property. Consolidating all these values, the taxable income from house property will be arrived. The process of arriving the income from house property starts from estimation of gross annual value. To arrive the gross annual value, four different values are to be considered. The firstly, fair rental value of a property. This is the value of the rent a similar property that an assessee owns in a particular locality decides his fair rental value. The proximity to various facilities in that area, the transport facilities, the shopping facilities, or decide on the fair rental value of a property. Then the municipal rental value, the corporation, the municipality fixes a value for an house property for the purpose of levying the taxes on the property. This is municipal rental value. Then standard rental value, the government fixes a value for a property through Rent Control Act. This is standard rental value. Then annual rental value or actual rental value. This is an expectations of a property owner and the affordability of a tenant decides the annual rental value for a property. Now, the estimation of gross annual value is done by a step-by-step comparison of all these four values. Firstly, the fair rental value and the municipal rental value are compared. Of that, the higher value is considered. This is compared with the standard rental value, and of this, the lower value is considered, and this is to be compared with the annual rental value. For arriving the annual rental value, the rent receivable during a particular financial year for the let out duration is to be calculated. From this, the unrealized rent, that is the owner could not able to recover the rent from the tenant. He should take all the steps for the recovery purpose, and it is to be proved. Only then the IT authorities will allow this deduction. Then the vacant rent receivable during the any part of the financial year, if it is vacant, that rent is to be calculated and it is to be added to the rent receivable. Consolidating all these values, the annual rental value is arrived. Comparing this with the lower value arrived from the previous step, the higher value is the gross annual value. So the estimation of income from house property starts from arriving the gross annual value. Let us understand this by working out a simple problem. This problem gives various details about the rental value and the municipal rental value, standard rental value, and the construction details and loan details of the house. Breaking down the details into small information, we are asked to work out the income from house property for the assessment year 2025-2026. Therefore, the previous year is 2024-2025. And rent per month is 1,50,000. Fair rental value is 19 lakhs. municipal rental value is rupees 14 lakhs, standard rental value is rupees 12 lakhs. The unrealized rent is rupees 2 lakhs. 2 months the property is vacant from 1st February to 31st March of 2025. And the property construction started during May 2021 and it was completed during March 2022. For this purpose, a loan is taken for rupees 20 lakhs on August 2021 at the rate of 12%. There is one more information, that is the municipal taxes at the rate of 10%. So to start working out the income from house property, firstly, the estimation of gross annual value is to be done. Comparing the fair rental value of 19 lakhs with the municipal rental value of 15 lakhs, the higher value 19 lakhs is considered. This is compared with the standard rental value of rupees 12 lakhs. From this, the lower value is considered rupees 12 lakhs. And from this, the annual rental value is to be compared. For that, for computing the annual rental value, the rent receivable for the let out period, that is, in this case, the property is let out during the previous year from 1st April 2024 to 31st January 2025. That is for a duration of 10 months. So 1,50,000 per month, and for 10 months it works out to 15 lakhs. And unrealized rent, it is given, that is the assessee says he could not able to claim from the tenant, and submitting the proper proof, it can be claimed as a deduction, that is rupees 2 lakhs. During this particular previous year, February to March, the property is remained vacant, but this is to be added with the rent receivable, that is 1,50,000 for 2 months is 3 lakhs. Consolidating these values, the annual rental value is 16 lakhs. This annual rental value of rupees 16 lakhs will be compared with the lower value computed in the previous step, and whichever is higher, that is 16 lakhs, this is fixed as the gross annual value. So gross annual value is arrived as rupees 16 lakhs. Now starting the estimation of income from house property of Mr. Vimal for the assessment year 25-26. When you write the heading for a statement, it should confirm 3 details, that is what is the head of income it is, who is the assessee, and for what assessment year it is been done. Now after giving these details, the gross annual value 16 lakhs and municipal taxes is to be deducted from it. The municipal taxes is given as 10% on the municipal rental value, that is 10% of 15 lakhs is 1,50,000. To consider the municipal taxes should be actually paid by the owner, then only it could be allowed as a deduction. The unpaid municipal taxes or municipal taxes paid by the tenant is not allowed for deduction. So in this case, this 1,50,000, the municipal taxes is deducted and net annual value is arrived, that is rupees 14,50,000. From this, a deduction under section 24, a standard deduction of 30% on net annual value is available for all house owners. That is, working out this 30%, it is 4,35,000. Then next deduction is the interest on loan. In this case, the bank loan of rupees 20 lakhs is taken and it is given as construction for the purpose of new house. The loan was taken during August 2021 and it is for a tenure of 15 years. That is, the loan is still on. That is, the loan is presently ongoing and the rate of interest is 12%. So this assessee could claim the interest that he pays for that particular previous year as a deduction. So annual interest on loan for 2024-2025 is rupees 20 lakhs into 12%. He could claim to the 2,40,000. So interest on loan is 2,40,000. And there is another deduction that he can avail, that is the pre-construction interest on loan installment. This pre-construction interest on loan is the interest paid on the loan during the duration the house is under construction. For this, we have to note down the construction starting date. In this case, the construction started during May 2021 and the loan was taken during August 2021. The construction was completed during March 2022. So comparing the duration from loan taken date to construction completed, the pre-construction period is 8 months. Pre-construction period interest is for 8 months. So rupees 20 lakhs, 12% on it proportionated for 8 months. That is 8 by 12. It works out to 1,60,000 is the pre-construction interest. Now pre-construction interest is 1,60,000. How much the assessee can avail? The pre-construction interest is allowed as a deduction in 5 equal installments. He can claim it, he can break it into 5 equal installments, and from the year the house is constructed, it can be availed. In this case, the construction is completed in March 2022. So 5 years, 2021, 2022, 2022, 2023, 2023, 2024, 2024, 2025. Our previous year in this 5 installments. So therefore, 1/5 of the pre-construction period interest is 1/5 of rupees 1,60,000, that is 32,000. So this assessee could make a claim on pre-construction interest on loan installment rupees 32,000. Consolidating all these values, the income from house property is rupees 7,43,000 for this assessee. Now, the key points that are to be considered in working out the income from house property. Firstly, to arrive the gross annual value, the 4 values, fair rental value, municipal rental value, standard rental value, and the annual rental value are to be compared. For arriving the annual rental value, the unrealized rent and the vacancy period is to be considered. Then, in case of self-occupied house, the gross annual value is to be nil. The maximum of rupees 2 lakhs is to be allowed as a deduction. You can claim it as a deduction for the interest on loan, and this is applicable only for the old regime. In case of let out house, there is no maximum limit on the deduction for interest on loan, and the assessee can claim it both under he is opting for old or new regime. In case if an assessee owns 2 properties, the loss arises from one house property can be adjusted with the gain arising from the other house property. Then the loss of house property income could be set off with the other heads to the maximum of 2 lakhs only. If it is beyond that, you can claim only up to 2 lakhs. And this concession is available under old regime. New regime do not give this concession. And any property, for any house property, if there is an carry forward after adjusting that 2 lakhs, if there is any carry forward, it can be done for the next 8 financial years. And when you carry forward for the subsequent financial years, it is to be set off only in the house property income of that particular previous year. Then pre-construction period, that is the duration during which the house is under construction, the interest paid could be broken into 5 equal installments, and it could be claimed in 5 financial years starting from the year the house is being constructed. Okay friends, I hope this video would have given you some basic details about the computation of income from house property. Your like, share, comment and subscription for the channel may encourage me to post more such videos. Thanks for watching.